In this video we are going to see about what is CPR indicator. CPR stands for Central Pivot Range. This indicator was introduced by pivot boss, named Frank Ochoa. The traditional pivot points generally have one pivot line surrounded by support and resistance level. Above the pivot line, you will be getting R1, R2 and so on. And below the pivot line, you will be getting S1, S2 and so on. This is called standard floor pivot points, which we all know. In standard pivot point, the price is above pivot point, it's expected to be bullish for the particular day, and the price is below pivot point, it's expected to be bearish for the particular day. This normal pivot point single line is broken into three lines, that is called expanded floor pivot points. This central line is called central pivot points, top line is called top central pivot point, the bottom line is called bottom central pivot points. These three lines are together called as central pivot range. And above this, default resistance will be there, and below this, default support will be there. Why these three lines are important? The importance of this particular indicator is, if these three lines are very near to each other, then it's called as narrow CPR. That trading day will expect it to be very volatile or trending, either on the upside or downside. For example, on the 3rd of June Bank Nifty had narrow CPR, so the market was trending day. If these three lines are far away from each other, then it's called wide CPR. That trading day will expect it to be sideways or less trending day. For example, on the 16th of May, Bank Nifty had wide CPR, so the market was sideways.
In this video, we are going to see about CPR opening tricks based on candles opening. CPR opening tricks have three types. There are 1. Above R1 below S1, 2. Between CPR and R1 and between CPR and S1, 3. Open exactly at CPR. Type 1. If opening first 3-5 minutes candles are above R1 or below S1, it will be a trending day. What is trending day? Trending day means the stock will be continuously going upside, or the stock will be continuously going downside, or both the things can happen. Here, the candles opened above current day resistance 1 and previous day high, and entire day was highly trending. You can take your long position around this region. You can either go for a long in futures or buy a call option. Initially, the price was the 33,600, and at the end of the day, it was around 34,600 and most 1,000 points rally happened here. Here, the first 3-5 minutes candles opened above previous day high, as well as the current day resistance 1, so the entire day was trending day. The candles went up from 33,000 to 33,700, so almost 700 points. Up move happened here. Here also, the market opened below previous day low and S1, and the entire day was trending. Here, the candles opened below S1 and previous day low, and the entire day was trending. You can go short or buy a put option around this region. The market opened around 33,700 and closed around 33,300. A good fall in Bank Nifty happened here. Type 2. If opening first 3-5 minutes candles are between CPR to R1 or between CPR to S1, it will be a range-bound day until R1 or S1 is broken. Here, the candles opened between CPR, R1, and the entire day was range-bound day or sideways market. Once the candles opened between CPR, R1, and S1, the market will be sideways until unless the candles broke either R1 or S1, so the entire day was sideways, even here. Type 3, if opening first 3-5 minutes candles are exactly inside CPR, then it will be a range-bound day. Candles may try to reach R1 or S1. Here, the market opened exactly at CPR, so the day was the range-bound day till afternoon. After that, it has broken previous day low in S1, so then it made a fall till S2, S3 50%. Even here, the market opened exactly at CPR, and the entire day was the range-bound day.
In this video, we are going to see about Virgin CPR. Virgin CPR concept is taken from The Secret of Pivot Boss. This is written by Frank Ochoa. Virgin CPR is called as Virgin Value Money Zone. As you all know, there will be CPR level 4 each and every day. If the whole day, the candles did not touch the CPR of the particular day, then the CPR called as Virgin CPR. On day 1, from 9:15 to 3:30 the candle did not even touch the single line of the CPR. You just extend this CPR line for next day. For day 2, also you will have a CPR value. You just forget about that. If the candle approaches the Virgin CPR level, immediately you can expect the reversal. Similarly, if the candles coming from up towards this Virgin CPR, you can expect bounce back towards upside. So, this Virgin CPR is having some power. See here, these 3 lines are not at all touched on May 24th, so this CPR called as Virgin CPR, we have to extend this CPR line for the next day, on May 25th. Once the candles reached the Virgin CPR, it's bounced back towards upside. See here, these 3 lines are not at all touched by the candles at on May 8th, so this CPR called as Virgin CPR, we have to extend this CPR line for the next day, on May 9th. Once the candles reached the Virgin CPR, it's bounced back towards upside. In some cases, the candles may also break the Virgin CPR and fall further. In such cases, if the candle reverses and come above Virgin CPR, we can take a long position. Similarly, in some scenarios, the candles may also break the Virgin CPR and move up. In such cases, when up candles reverses and come below the Virgin CPR, we can initiate our short position.
In this video we're going to see about ascending and descending CPR tricks. If the level of CPR is increasing like this every day, then it is called ascending CPR. Whenever the CPR value is moving higher and higher, you can see the bullish move. Because is forming one above another, like climbing the stairs. If the level of CPR is decreasing like this every day, then it is called ascending CPR. Whenever the CPR value is moving lower and lower, you can see the bearish move. Because is forming one below the other, like walking down the stairs. Whenever the CPR is aligned very close to each other, in such cases, market will be sideways or range-bound. Ascending and descending CPR is used to identify the trend. Whenever there is an ascending CPR, you can look for long opportunity. Here, we had ascending CPR. You can take or initiate your long position once the candles took support at CPR or R1 previous day high. Whenever there is an descending CPR, you can look for shorting opportunity. Here, we had descending CPR and, once the candles took resistance at bottom CPR, or S1 previous day low, you can initiate your short position, and similarly, here also you can short position when candles took resistance at bottom CPR. Whenever the CPR is neither ascending nor descending, and it is aligned very close to each other, in such cases, market will be sideways or range-bound. Whenever there is an ascending CPR, you can see the opportunity to buy. Whenever there is an descending CPR, you can see the opportunity for sell. Whenever there is an overlapping CPR, you can avoid trading. If you like this video, stay connected with us.